Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. I'll be presenting the Asian Session Live Market Analysis and the Forecast webinar on 23rd of November between 5 and 5:30 GMT. I'll try to explain the expected market moves for this particular week, 23rd to 27th of November, the session-wise forecast, and also I will do the market reading in order to find out how exactly the players are expected to make the specific moves in a market. So that will be used to fine-tune the forecast. Then afterwards, I'll explain the trading strategy, what we can do during this extreme market conditions. So my contact details are given here because many people ask me how to contact. Sometimes they go to FX Street and ask from there under my profile. So that is why I thought that I can display my contact details for you to contact freely and without any marketing attached to this. You can, if you've got any doubt, you can call me or you can just contact me through email. I'll be willing to answer to those questions after that of the webinar time. During the webinar time, if you have other questions, you can ask me in the chat window. I'll be glad to answer to your questions. So, first of all, I will give the derived forecast for this particular week, informations in two commodity pairs. Then afterwards, I'll do the market reading and explain about the trading strategy. With regard to the market forecast, this is the 4th week of November and the market is expected to make the trending move and the trend is expected to be upward. But on Friday, during that of the US session, after gaining the levels initially, they suddenly made the drop in the case of Euro and GBP. Especially in the case of GBP, they made a big drop on Friday. And that is mainly in order to handle the European crosses and also the crosses of the commodity pairs. And on Friday, you would have noticed that Australian dollar was not dropping. Only Euro and GBP are dropping. So the main objective of that is to keep Australian dollar strong and weaken the numerator currencies, namely Euro and GBP. As a result, that Euro Australian dollar and GBP Australian dollar, they made a massive drop. And also in the case of the other currencies, they made a specific drop in the case of USD. So on Friday, the drop in the case of Euro and GBP are done along with that of USD, mainly to handle the yen crosses and also along with that of Australian dollar. They gained level in the case of Australian dollar and dropped Euro and GBP mainly to handle the commodity crosses. So during last week, they mainly handled the commodity crosses, and during this week, they are expected to handle the majors. This being the last week, they will aggressively gain the levels in the case of Euro and GBP, and also you could come across the contrarian move of gaining the levels in the case of USD and also in the case of Australian dollar. So here, if you notice it carefully, what Australian dollar they are not corrected on Friday, they are correcting more now when compared to Euro and GBP. So this is how they handle the crosses. And then during the last week, they come to that of the majors in a big way. So market is expected to make USD weakening move in this particular week. So that could become visible from that of the European session today. So the expected market moves, they are expected to make the swings during the early part of the Japanese session as the week beginning false move, and then not a big drop, just a week beginning false move, and then firm up from there. And if you have noticed that exactly up to 3:30 GMT, they made the slide in the case of Euro and GBP. Afterwards, they started reversing all. So initially, they made the USD gaining move up to 3:30, then started reversing the market, stopped cutting the new lows, what they have formed for the week beginning time. Then they are expected to firm up during the US session. And tomorrow they are expected to firm up during the Japanese session, followed by that a small slide during the European session, and then rise again during US session. Then Wednesday, 25th of November, they're expected to make the swing and slide during Japanese session, because they always alternate the intentional move with that of the extended move for 2 hours, because they cannot continuously rise or continuously drop. In that case, all the traders will try to take the position in line with that of the players. So they want the traders to commit wrong position and then later on trap the traders. Only then the players earn money. For that, they will make intentional move alternate with that of the extended move on the opposite side. Then afterwards, they are expected to make the rise during the European and the US session on Wednesday. Then again Thursday, they are expected to make the slide during Japanese and the US session and firm up during US European session. And this is mainly they just after the gaining levels, they make sideways move and a little bit of drop. So long holders, out of fear, they will liquidate the long positions, and afterwards they are expected to gain big the level for nearing the month end time. Then the following week will be the month end trend reversal time. That will be from 30th of November, just 1 day of November, and 4 days of December. And then you will come across the month end trend reversal, which will be followed by that of the yearly trend reversal. Because the month of December and the month of January, they try to make the yearly trend reversal also. So once the monthly trend reversal gets over, they will start the yearly trend reversal, which will be more and more aggressive. So during that time, you will come across the unexpected moves happen in the market. And most of the time, during the year end, people normally follow the charts and explain that could be a drop or a rise. The opposite the players do. And this time also, the traders or the analysts are expecting the market to drop in a big way for the year end. And they just pretended as if it is going to make a big drop during the month of December, but they are expected to reverse the market suddenly as an unassuming surprise to the traders. So this is what expected. Probably it may appear the market may not gain the levels, but unassuming gains are expected to happen in the final part of the year. Now, with regard to the levels in which the currencies are expected to swing, it was expected to make the low as 1.0625, but actually it has made 1.0600 during the Japanese session and started gaining the level. Stopped cutting from 3:30 GMT up to 5 GMT and all. They are not breached the low. So they set the low for the day and then reverse the market. And in the case of GBP also, 1.5157 was set around 325 GMT. Then subsequently, they are not breached it, slowly gaining the levels. And in the case of yen, they formed the high and then started reversing it. Then in the case of Australian dollar, it formed the high 1.0217 and started dropping. So they are expected to make a drop and then gain the levels in the case of euro and GBP. And in the case of Canadian dollar, they have gone almost close to 1.34 and stopped cutting the new high and started making the slide now. And similarly, in the case of Australian dollar, they have come to 0.7160 and then started reversing it. So in all, you find exactly up to 330, they have been making the USD gaining move, and followed by that, you come across slowly the USD weakening move. They have made it. It will be an unassuming move. People might be thinking that this small bounce and things like that, but they will make an intentional move of USD weakening in this particular week. That might give enormous surprise to the traders, because last week when they gained the levels in the case of euro and GBP, many traders would have taken the buy position after the gain, and that is why the players have made suddenly a drop on Friday, because when they found that predominant of the traders are holding long position, they always act against that of the traders. So the focus was expecting Friday a quick rise during that US session, but They made the drop, but they are expected to compensate the rise aggressively today during the European and the US session. And with regard to the initial lows and the highs, they are not breached the low or the high in the case of euro. High, they have just breached it by 1 pip. 1.0645 was the initial high. They just cut it by 1 pip and 1.0646. And GBP 51.57 is the low, 51.96. So 96 is the high, which is not breached. And USD and 122.84 is the low, 123.26. So 122.26 is the high. They made 27, and I think they corrected it to 123.27. Then in the case of CHF, 1.0910 is the low, 1.0217 is the high, so they are not breached the low or the high. In the case of Canadian dollar, 1.3334 is the low, 1.3398 is the high. They are not breached the low or the high. Australian dollar, 0.7160 is the low, 0.7234 is the high. And here again, they are not breached it. Excepting euro, all other currencies, they are not breached the low or the high, which indicates that they are simply holding all the currencies and they want to straight away gain the levels during the day. So carefully watch and don't become bearish, and watch carefully and try to take the positions and use the hedge order to limit the risk, because the market is known to make sudden stop and moves, etc. Because when the players find that the traders are turned long, they will make a downward stop and before making further rise. So that you have to keep it in mind, and then use the hedge order to limit the risk. And if it is hedged, watch for forcibly 10 minutes minimum, so that in 10 minutes, if they don't show profit in your hedge, then you can close the hedge and keep a tight hedge order or 5-10 pips below that, and also watch and trail the hedge order as they gain the levels. That way you can tighten the hedge order. Probably it might be frequently hit, but still you can handle it without much of a loss. If you wait for 10, 15 minutes or 20 minutes, what happens? Sometimes the loss becomes big. So in order to avoid it, you can keep tight hedge order and watch exactly for 10 minutes and close the hedge if it is not showing profit, so that the hedge will be closed with 2-3 pips loss, and then you will be able to easily make up the loss by gaining the levels. Now, with regard to the trade recommendations, so I'm giving the trade recommendations as buy euro around 1.0615 and keep exit at 1.0660, just 45 pips above, and the stop 15 pips, 30 pips below that of the entry, 1.0585. So in the case of GBP also, buy around 1.5170 with exit as 1.5210, and then the buy around 5150. So these are all the two positions I just recommend. Buy in the case of euro and buy in the case of GBP, and later on they are expected to gain the levels during that day. Then you can keep stop at entry and trail the stop in a profit making position, and also trail the limit order in order to gain more profit. And these are all the market timings. So those of you who are interested to find out when the early session starts and the late session starts, etc., you can make a note of it. This webinar is being recorded, so you will be able to see in the recording of the webinar again the timings, and then you can make a note and trade accordingly. So early in the late sessions, they handle the majors. Mid sessions, they handle the crosses. Then I'll come back on 27th of November Friday and give the analysis or review part of this webinar. And meanwhile, if you've got any questions, you can ask me the questions through that of the chat window. I'll be willing to answer those questions. Yeah. Now, with regard to the yearly trend reversal, when do you see USD CAD? Where do you see USD CAD? Do you expect it to come back to 1.02 level? Now, as far as USD CAD is concerned, it is expected to come down below 1.30. So, intraday, they may touch 1.28 area. Any other question? If you've got any question, you can ask me the questions. I'm willing to answer those questions. So let me show the focus slide. So these are all the expected market moves. At the moment, you come across Euro, GBP, and Australian dollar showing negative net change, and USD and USD CHF and USD CAD are showing positive net change. The USD gaining moves, but after forming the initial lows around 3:30 GMT, they stopped cutting the new lows in the case of numerators, new highs in the case of denominators, and they are expected to make moves. So if you've got any question, kindly ask me. I'll be able to answer to those questions. So the market is expected to show more of a gaining move in coming days. So year end also we are expecting, the forecast is expecting the gaining moves. Okay, there is another question from Alton. Can we expect the Euro USD moving up starting today? Yes. For this week, I was telling you last week also that this week onwards they are expected to gain more levels, and they are expected to gain the levels now. So you wait for the gains, and then later on you can find out how exactly they have made the unassuming moves. But still use the hedge order to limit the risk, because we cannot afford to take risk during the year-end trend reversal time. Any other question? So if you've got any question, you can ask me, then I'll be willing to answer to those questions. Now I think the Euro position will get it filled, and also the GBP position. That's what I recommended. Just about few pips lower, we'll be able to get it. So 1.0615, and GBP also is still not filled. So Euro has been filled. So that will become a position. Then do yearly trend reversal start December and end January? They are expected to start the yearly trend reversal moves now you will come across the monthly trend reversal. I mean, this week it will be upward move as a trending move for the month, then monthly trend reversal during that of the next week. Then from that of the first week of December, that is from 7th of December, you will come across the yearly trend reversal. And the yearly trend reversal, the market is expected to show very high volatile moves. So they will suddenly make about 150 pips drop and then gain about 200, 250 pips gain levels. And that sort of moves they are expected to make during this particular time. So watch carefully and do it. And you have to use necessarily hedge order to limit the risk. The yearly trend reversal will be aggressive whipsaw, and one has to be very careful in handling the positions, and it will not be easy way of trading during the yearly trend reversal. Why? Because the players want to earn as much as possible to show their books of records the highest level of profit. The yearly profit, they have to show it to the big players. The banks have to show that. So for that, they will make whipsaw moves, and very frequently. And even for any small data release, they might make about 200 to 50 pips drop or the rise. So you have to be very careful during this particular yearly trend reversal. But in that process, less drop and more gain moves are expected to happen. In the previous webinar, you said that euro will make upward move by the end of the year. What is the expected level to January? No, let me not give the levels for December, January, etc. And they are expected to gain about 1,000 to 2,000 pips. But I will not mention the levels now because you have to trade for the intraday and for the week, not more than that. Because small traders may not be able to hold the positions successfully because they will be making quick up and down moves in the market. So any other question? Till February 2016, the upward move is expected to happen. If you got any question, you can ask me. Otherwise, I'll just conclude the webinar. So last Friday, there was a drop in the case of euro and GBP against the expectations of the forecast, and they are expected to gain the levels that they have done it mainly to handle the crosses, and they are expected to gain the levels in the case of euro and GBP during this particular week, being the last week of the month of November. And next week, they will be making the monthly trend reversal from 30th of November till 4th of December. Then followed by that, during the month of December and during the month of January, they are expected to make the yearly trend reversal for 2 months. Similar to that of the last week and the first week of the month, they make the monthly trend reversal. And the yearly trend reversal will be during that of the last month and the first month of the next year. Michael has got a question. Sometimes I feel like I'm chasing the market. Do you feel like this when you start trading? It is not actually the chasing the market. Probably that is an emotional expression. And what you have to do is when they are making the slide, you watch and see that they don't cut the low for more than 10 to 30 minutes and then try to take a buy. Then you'll be able to easily keep stop at entry. What happens now, after they gain the level, if you try to enter, then you feel like chasing the market. So during the drop, that is a common sense, right? During the drop, we should buy when it is available cheap. But only question is whether that will be the low or the market can drop further down. So one is you have to wait for 30 minutes that the new low is not being breached for more than 30 minutes. then you can take a buy, and definitely it will show a profit. You should be able to keep stop at entry. The other way of doing it, you know very well, whatever the level you take a buy or a sell, and you are keeping 30 pips hedge order to limit the risk. And once the market moves against you, you are hedged. Then you will be in a position to book profit in the hedge. Or you can keep stop at entry in the hedge. And once the market reverses and close the stop at entry, the market will move in your favor and you can continue to trade with the original position. So the trading strategy ultimately will help you. So if you think that your forecast has to come true all the time, that might be next to impossible. Because if you think that, okay, 70 to 80% of the time the forecast is coming true, still in 20%, if the trade is not going well, we will not be able to earn what we envisage. So we have to earn the money from that other market only by using the trading strategy. Will you trade non-farm payroll? Yeah, if FX Street is organizing it for it, then I will give the call during the non-farm payroll. That is going to be the next week. Then, do you mean volatile upward moves will prevail until February? Yes, you are right. So until February, they are expected to make very aggressive, quick move, and afterwards they will be making a downward move. Of the gained levels, they will lose. To such time, they are expected to gain more levels. If you also watch in the market carefully, you will come across buy and sell trades can be done easily, but the only thing is they quickly reverse the market. So if you use the trailing stop in profit making position, you should be able to make profit. But if you trade without a stop at entry or without a trailing stop, then when they reverse, you might find the position is making loss. So I take this opportunity to thank FX Street for the facilities provided to present the webinar, and I'll come back on Friday and 27th of November and explain to you what had happened in the market and compare the actuals with that of the forecast given, session-wise forecast given, so that we will be able to understand the dependability of the forecast and also whether Euro and GBP are really gaining or losing levels, etc. Then also I'll give the trade recommendations at that time for you to fine-tune your understanding of the market. So wish you all happy trading during the week beginning. See you on Friday.